Okay, good morning, good morning, everyone, and welcome to this last Trinity Research in Social Science webinar on the consequences of COVID-19. Today, we're going to be talking about the implications of COVID-19 and maybe implication of the confinement and social distancing on retailing. I'm going to introduce the guest in 1 second, just to let you know that this session is recorded live. We have muted the participant, but you are more than welcome to ask questions via the Q&A box if you want, and I will write that down and pass on your questions to our panel. So COVID-19 is a tragedy. We all know that. I think we've heard quite a lot about it over the last few months. To mitigate the effect of this tragedy, governments have first confined the population, and now there are new rules with regard to social distancing. Obviously, those measures have been successful in mitigating the effect of the disease, but they are also creating another tragedy for many industries, and particularly the one depending or facilitating consumer mobility, such as airline, tourism, the car industry, but of course also, and that's the topic of today, retailing. So food retail is maybe doing okay. Non-food clothes, luxury retail, not so well. With estimate varying from minus 40% to 90% on a year-on-year basis, depending for the month of April, depending on where you were in Europe and which region within Europe. So this is going to be a massive crisis. Of course, we know that innovation may trigger some destruction, but in this case, maybe it's destruction that is coming first, and we will see eventually how and if it will lead to innovation. So to discuss those questions about the future of retail and the impact of the crisis, we have three great guest speakers, and I'm grateful that they've accepted to come and share their expertise with us today. First, we have Jonathan Reynolds from the University of Oxford. Then we have Devon Hughes, who will talk about food sector and innovation opportunities. He's the CEO and founder of Buymie. And then we have Sinead Roden from Trinity Business School, who will explain the consequences of this crisis and the supply chain implication. Before I introduce our first speaker, Jonathan, in more detail, I just wanted to let you know of something. We are at the Trinity Center for Digital Business. We conducted a small experiment a couple of months ago with the help of our master's student in digital marketing. And it was for the Irish government. So it was not retail, but it was a service setting. And our job was to assess the experience and mapping the journey of consumer when they are finding themselves at key moments of their life, such as getting married, getting a first job, getting unemployment benefits, paying taxes, and things like that. What we found out was that when we mapped their process was that there was a lot of touch points, and some of those touch points were more critical than others. Touch point is moment of interaction between the service provider and the citizen or the consumer. And obviously, when there were too many touch points and when there were negative touch points, the overall experience was tainted. Now that we have social distancing, there's going to be a lot of issues around those touch points, and maybe e-commerce and digital touch point is going to be a point of discussion. I'd like to ask a few questions to our first speakers that relate to this notion of experience and touch point, and I'm sure he will come back on this. But first I'll turn to Professor Jonathan Reynolds, who is the leading expert in the study of the retail sector internationally, or one of the leading academic in the area. He has published numerous articles on the topic, and also a book that is a reference in the domain. He's an associate prof in retail marketing and deputy dean of Saïd Business School in the University of Oxford, and is the founding member and the director of the Oxford Institute of Retail Management. So I would like to ask you, Jonathan, more broadly speaking, what do you think is the future of retail? And more specifically, and I know you have a few points that you'd like to talk to more specifically, what do you think of this notion of experience and how experience is going to be affected in the future through this reshuffle of the customer habit thanks to COVID-19? So, Jonathan, if you want to let us know your thought on this initial question.
Thank you, Laurent. Good morning, everybody. It's great to be part of this this webinar, and great to work with you on thinking through this really complex and challenging issue. The sector, I think, has seen more change in the last 3 months than perhaps the last 3 decades. You know, in terms of the impact on non-food retailing in particular. I think food, as you suggested, has done reasonably well. I want to focus my comments particularly on discretionary spending, because I know we're going to have some contributions, particularly focusing on food retail. And it's great to know, for example, that in Ireland, I think hairdressing is opening today, which is good for many of us, not for you, Laurent, I suspect, but for many of us. And we've seen a gradual release of lockdown in many countries worldwide, some perhaps premature, some less so. What I've got are a few comments on 4 themes that I'd like to explore with you, and I'll just, if I may, just share my screen. And what I'd like to do really is to focus on 4 broad themes. First, the early evidence. What can we see around us at the moment that suggests either good or bad news as far as the recovery of the sector is concerned? Secondly, around experience, as you've mentioned, you know, the evolving nature of touch points in the retail sector is really very interesting at the moment. How tolerant will consumers be of these new forms of mitigation that are being imposed on them? Queuing, social distancing, and so on. Will it spoil? Will it destroy? Will it erode the advantages that many retailers have built up in terms of creating an experience? Thirdly, I'm a geographer by background, and actually I can't resist talking about location. That's my third point, which is really that I think we're going to see some very different winners and losers in terms of locations, both at the national level, but also at the sub-regional and city level around different marketplaces. And then fourthly, we have to conclude really with some comments on the economics of all this, the context, the economic context, for example, in the UK, where we may have 2.5 to 3 million people unemployed, and certainly significant pressure on many of the rest of us in terms of our willingness to spend through any retailers, whether those are offline or online. So those are the 4 themes I wanted to talk about in the next 10 minutes or so. And perhaps the place to start is, of course, we're at very early days on this. I know you're in, was it phase 1B or 2B in terms of the release from confinement in Ireland? We're at about stage 53, I think, in the UK. It's all very confusing. We're not quite sure where we are. But what this chart shows, I think, is the gradual kind of move from lockdown situation at the end of March in 3 economies, Ireland, the UK, and the US, and how those have gradually recovered, but only gradually. And even by the end of June, we look at Ireland and the UK, and we see, for example, only a sort of 40 percentage point recovery to where we were before the lockdown. The US is a little different because, of course, we know from the US experience that perhaps lockdown has been released prematurely in some of those kinds of markets. And this kind of suggests to us that this is going to be a marathon, not a sprint in terms of recovery, I think. And yet, when we look at what's happening elsewhere in the world, we look, for example, at China, which, of course, experienced the early kind of impact of the pandemic. What's happened in retailing in China? And we see some quite interesting things. So, for example, Hermes was reporting its first day post-lockdown. Hermes in Guangzhou sold nearly $3 million worth of goods in one day, broke all records. So there's this sense of a kind of a pent-up demand in the system for discretionary spending, where we've seen a kind of revenge shopping, as it's been called, where people are just desperate to get out of the house and rush along and want to buy things. Yeah, that's not everybody. So it's only a proportion of people we see doing this. And when we look at some of the data on this worldwide, you know, the fear of catching the virus still is pretty high. In the UK, it's about 45% are worried about catching this virus still. In China, it's 60%. In Germany, about 35%. So there's a significant portion of people that are still pretty anxious about getting out and about. And that's often demographic. It's kind of older people, perhaps families. And so we're seeing on the streets, younger people, perhaps those who are desperate to get out of lockdown. So we're seeing a very different kind of return to normality, a very incremental return to normality in terms of the early evidence. And people avoiding crowded places, something like 70% in the UK saying they want to avoid crowded places, and they would count a shopping mall or a large store as a crowded place from that point of view. So the second theme is really, what kind of experience lies in store for people when they do emerge from lockdown. The worrying thing is it could be like this. This is IKEA in Warrington in the UK, which when it first opened a couple of weeks ago, was looking at a 3-hour queue of people who'd started queuing from 5:30 in the morning. And going back, Laurent, to your point about touch points, you don't even get into the store for about 3 hours for your first touch point. So there's a lot to be done in some senses to try and understand why people are queuing, what can make their queuing lives easier. Are they going to be queuing for forever? Or will the novelty wear off after a certain period of time? So this kind of notion of the sort of interim period where people are in relief of lockdown, are out there trying to adjust to normal, but having to queue up and having to get into these rather difficult kind of socially distanced experiences. Here's another retailer, B&Q, home improvement retailer, absolute carnage. Crowds flocking to B&Q as more than 100 stores reopened, and many people not observing the social distancing guidelines and so on. So it's a pretty unpleasant experience potentially, and that speaks badly to the sort of seamless touchpoint argument. There's queuing, there's social distancing, there's anxiety. But on the positive side, we can also see firms engaging in innovation in this area. So, for example, digital queuing, so booking a slot to get into the retailer at a certain point in time. These have all been, I think, quite interesting experiments that we've seen over the last couple of weeks. Trying to produce a more personalized experience for the consumer, and also managing the queue more effectively. The immediate reaction to that is to say, well, of course, people will go online. People are not going to tolerate this kind of experience for very long once the novelty wears off. But will they go online? And if they do go online, will they stay online? Certainly, again, in the UK, we've seen I think a 15 percentage point increase in online penetration of retail sales over the last couple of months. We're now looking at 33% in May of all retail sales were online in the UK. And that's a mix of food and non-food. But the question is the online experience any better? And certainly when I looked at this headline for B&Q and I thought to myself, I don't want to go there. I'll buy my home improvement things online because I'm doing lots of DIY jobs around the house. I went to the B&Q website and I found this. You've joined our virtual queue. Your estimated wait time is more than an hour to get to the website while we're working on safely reopening our store. And once you get to the front of the online queue, you have 10 minutes to get into the virtual store, but you can stay as long as you like, which is very reassuring. So online is not all it's cut out to be in terms of the user experience. And we can see that, not just through online queues, but the difficulty of getting booking slots for deliveries, for food and groceries in particular, and then slower deliveries as warehouses and distribution centres are having to put in place social distancing guidelines, which is slowing down some of their supply chain. Still, many will have become used to that online experience, I think, and will be trying to make the most of it during that time, and will be taking away from the store-based customers. The third theme is around location, and the impact on location, I think, is really, really interesting. Recovery can be measured locally. So this is some work done by a spatial data business called Geolytics in the UK. They're tracking mobile phone data, looking at footfall through mobile phone data for particular locations in the UK. And they're discovering a number of things. They're discovering that the recovery, for example, here in Leeds, has actually been quite good. But somewhere like London or around transport hubs has been much less so. So it's going to be a very patchy recovery in terms of particular locations. And whereas places like London and big metropolises have had a big impact in terms of the lack of recovery, what we're seeing, of course, is the local businesses and the local economy has benefited from the period of lockdown and confinement. And again, if I look at some UK data on this, convenience store sales up 17% as shoppers go ultra local. And that's partly because of necessity. And in Ireland, I think you were limited to travelling more than 20 kilometres from home. It's been less constraining in the UK, but even so, people have been shopping locally at their convenience stores, at their local markets, and so on. And indeed taking advantage of sort of delivery services as well. How long will these behaviours sustain themselves once stores reopen, or will we find that people will actually get used again to travelling long distances to go non-food shopping? Certainly, the evidence seems to suggest that customers claim they're going to remain loyal to local stores. Working from home may change the way in which we shop anyway. So if we're working from home more often, we may still shop locally, many of the things that we want, or use online. And then we're starting to see changes in real estate as well, which may mean that perhaps the city centre locations, which were so great for office-based shopping trips, are perhaps less attractive for the customer these days, because actually it's a significantly more anxiety-inducing experience to get on the underground or to get on the bus with your face mask on and so on, to go to a non-food outlet in a big city centre. So we're going to start to see some big changes there, I think, as well, as some of these forces work their way through. And the final theme I wanted to talk about was economics, because that, of course, is really the driver of the demand we're likely to see in the short, medium, and long term. And I mentioned, potentially in the UK, 2.8 million, 3 million unemployed. In the US, we've seen phenomenal numbers of individuals registering unemployed over the last couple of months. Is that going to be a V shape or a U shape or an L shape recovery? And that will affect, of course, the level of demand for retail goods and services. And the big story in the UK over the weekend was the collapse into administration of Intu, one of our biggest shopping centre managers, with 4.6 billion in debt, running around about 17 quite big shopping centres across the UK. And those centres themselves employ around 130,000 people. So there are some big economic forces working their way through the system at the moment. It's still early days to see whether it's really just, if you like, the zombies that were already the walking wounded when they walked into the pandemic, simply failing sooner than they might have done otherwise, or whether these are more secular kinds of changes in terms of the viability of certain types of retail activity. Intu arguably was already in difficulty before it hit the pandemic, and really this was an accident to some extent waiting to happen. But certainly the impact of this in terms of 17 big shopping malls in the UK could be quite significant. So who are the winners out of this? Well, people often say, well, Amazon is a winner. Well, Amazon may well be a winner, but not necessarily a profitable one. I mean, Amazon spent, I think, $4 billion in the last quarter in terms of increased costs in safeguarding its warehouses and allowing itself to scale up its operations to deliver to the new levels of demand it was experiencing worldwide. And certainly its share price responded accordingly. But how sustainable is that cost base in the longer run? And can it lead to more profitable trading, even for a business like Amazon? And then we look at things like sustainability taxes and e-commerce taxes that are being talked about. So it seems there may not be a lot of winners out of this whole process, other than those that are really creative and innovating extensively, as we'll hear in a few moments. And my final slide really is just to remind us that this is a marathon, not a sprint. If you look at the potential impact on the economy over the next year or so, this data comes from the OECD and is looking at GDP change by country, that we can see, for example, Ireland, about, where are we? About 2/3 of the way along, looking like around about an 8% fall in GDP, but the UK going down as low as 12% in terms of next year. And that's provided there isn't another spike in infections later this year, which would take economies down even further, according to that chart. So forgive me for ending on a bit of a gloomy note, but it seems to me that we are in for a really long haul of recovery out of this. This is going to certainly favour firms that are creative, adaptable, and to some extent have deep pockets or an agile strategy to meet the demands of the next year or 2 years in the retail marketplace. So I hope those comments help initially.
No, thanks a lot, Jonathan. That was very insightful. And before I move to Devon, maybe for the follow up, I'd like to ask you maybe one quick question. It relates to the notion of location that you have mentioned, and also the loser and winner. And let me summarize what I got from your presentation and tell me if I got it right or wrong. So you see amongst the winner, the local convenience shop have been clearly the winner. Of course, there'll be the e-commerce and digitally astute company like Amazon's and others might be the winner, provided that they sort out their supply chain issue, which is something we might talk about later. But as far as retail is concerned lately, the last 15, 20 years, there's been this tension between city center retail and mall retail.
Yeah.
Do you feel that because you need to take the subway and public transport to get to the city center, or mall is going to be less affected than the city center's retailer, or how do you feel about that?
I think it's going to be quite difficult for city centre malls that are reliant on public transport. I mean, London, for example, Westfield malls at Stratford and at the West End, there is some parking there, but it's quite difficult to get to. People are unwilling, I think, to use the underground to get there. But you're also, in some places, losing the office shopping population as well, as individuals in the cities, for example, maybe working from home for another year before they come back into city centres. So you're looking often at places that are easily accessible by car, potentially. So that could be retail parks, for example. You're looking at local operations where perhaps you may end up with hub and spoke real estate. So you may find big businesses will open up kind of regional offices in less sort of central locations to cater for those working from home that need a closer workplace. These are longer term trends, but I think we can start to debate these. So I think it's almost turning on its head, potentially. And I welcome others' views on this. Some of the ways in which we have thought over the last few years about a hierarchy of shopping places, from the big city centres down to the smaller kind of local parades and so on. It certainly puts some of that hierarchy at risk, I suppose.
Okay. Yeah. Thanks a lot. Yeah. That's extremely insightful. So moving on to a sector that maybe has not been as negatively affected, as a matter of fact, positively affected. Well, convenience store and food shopping. I'm turning to Devon, and maybe before I go into asking you a question, Devon, let me quickly introduce yourself. I mean, you're the CEO or founder of a company, a mobile app company, if I want to call it this way. I'm sure you will correct me. A platform company called Buymie, and you will explain exactly what Buymie does. But we know that you don't have any store, and you don't have any van, and you don't have any sales. Well, infrastructure per such. So you're a little bit like the Deliveroo of the Uber of that world, would become like a major player in an industry, and yet it seems to have very little asset. But you will explain to us how it works. I'd like to ask you really to, you know a lot about platforms, and you've been the director of Sharing Economy Ireland, and so I'd like to ask you about your opinion about like the role that digital platform might play. But before that, maybe you can tell us a little bit about what Buymie is about and how the food industry and your particular company have been impacted by this crisis as a way of example. So Devon, I'm going to let you take over.
Thanks so much, Laurent, and I really appreciate you guys having me on today. So, so this is such an interesting period, and there's such a unique mix of impacts, I think, that we're seeing off the back of COVID. And I think, grocery and food retail is in such a unique position. And what I wanted, I suppose, to do today is to really take an opportunity to share a slightly more macro view of what's happening within within grocery, within FMCG, because, although all of a sudden it's a very hot topic now, and particularly over the last 3 months, grocery retail has been going through a significant period of flux for the past 4 or 5 years. I'll give it a little bit of background on myself. I'm here with some very esteemed individuals, so I might give a little bit of background on my own experience. My background is not primarily technology or even grocery. I spent the vast majority of my career working in the energy markets, which was working with large, pharmaceutical manufacturers, retailers to, understand, analyze macro market movements and develop hedging strategies and trading strategies that would help them avoid the impact of, geopolitical movements that would impact the cost of energy. And, in 2014, I was getting the itch to start another business. Buymie is my 5th business, so I've had 4 spectacular failures that have got me into this mess. And I stumbled upon a commodity market I'd never really seen before, or at least never really appreciated, I suppose. And that was the grocery e-commerce market. So to give it a little bit of framing, grocery e-commerce in 2014, when I first started looking at this space, was worth £9 billion just in Ireland and the UK alone. I mean, there are not many markets of that size. The residential electricity market, for example, is 13 billion. But what I understood immediately, and maybe to give a little bit of context as to what's happening in this space, because obviously online within grocery is becoming a massive channel, and it's been greatly accelerated in the past 3 months. But one of the key things that not many people understand is that grocery online is deeply unprofitable. And it has been burning cash for the best part of 20 years. And so in 2014, when I came across this market, I recognized that there's a massive hole that really was being heavily subsidized by the retail market. And so out of a £9 billion market, you were losing £300 million a year as an aggregate. You're ultimately looking at a dysfunctional market, but at that time it was a very small portion, and subsidization is very common in markets. Gas, for example, is a subsidized market. But when I looked at the long-term demand curve for online grocery, without COVID, it was already set to double to £22 billion within just 10 years. The fact that it was already heavily loss-making, gave me I put my free market economist hat on and thought, well, if you have a rapidly expanding market and heavily compounding losses and a very short window of time, it's very likely that this market is going to experience a significant correction, a disruption of some sort, and that will be driven by the market, because the market just will not tolerate these levels of inefficiencies. So I really got quite excited about this and thought that this might be a very cool place to be for the next decade or two of my career. And that year I left the energy markets and decided to kind of embark on this journey. So I'll give it a little bit of context on what Buymie is in the context of the service and the business that we are. Ultimately, Buymie is a free to download app across iOS and Android, and we allow users to order grocery and household items from large retail partners like Lidl and Tesco today, and have their items delivered store to door in as little as an hour by their very own personal shopper. We charge a commission, we charge a delivery fee. We're about 20 to 30% cheaper than visiting a traditional convenience store. And we're 12 hours faster than your next day traditional delivery services that have been around for the best part of 20 years. The way in which we work is quite unique because, as Laurent indicated, we don't own any vans, we don't hold any stock, we've no warehouses. A lot of people think of us as a delivery company, but in fact, we're actually a data science company, and we are a platform, pure and simple. And what that means is that when a customer downloads the app, we provide the infrastructure to collect the data of their order. And they choose a store that they want to shop in, they fill the basket with the items that they want, and then they place the order into the platform. At that point, that order is fed into Jarvis. For anyone who's a Marvel nerd like we are, Jarvis is essentially our core IP. It's a high-frequency optimization algorithm that essentially monitors all the real-time variables of the grocery retail market at any given time. And when I say variables, what I mean is, how many items are in a customer's order? Where is that customer located? What are the stores within that region? What's on-shelf availability like? Traffic conditions, weather conditions. How many shoppers are available on the network, and where are they predicted to be at any given time throughout the day? And so when the order comes in, Jarvis will analyze the order, bundle it with orders of a similar characteristics, and then send that to an independent personal shopper. So this is Marta. Marta is available. She's told Jarvis a week in advance. She's booked a session on the platform, so Jarvis knows where and when she's going to be available. She receives the bundle, accepts it, and then is routed to the very best retail location to fill that order from. So the customer doesn't choose the retail location. Jarvis will actually choose the location based on things like chill chain and logistical proximity. So Marta arrives in store. She will use a shopper app, which is a complementary interface and that allows her to view the data that the customer has compiled in their order. She'll pick, pack, and prepare the items on behalf of the customer. If there's anything out of stock and they don't have any fillet steak, she'll ring the customer to say that they don't have it and manage those expectations, and also find the very best substitution for the shopper, for the customer at that time. She'll then pay for the items like a normal customer would at checkout using a prepaid card, which Jarvis has preloaded with capital, or cash rather, to be able to purchase that order on behalf of the customer. So it's a completely cashless system. We facilitate the transfer of two things: data flow and cash flow between two stakeholders in the market, personal shopper and customer. At that point, she leaves the store and Jarvis will route her again via the most optimized logistics route to deliver those orders on behalf of those customers. And so that gives you a little bit of a flavor of what we are as a business. We're a pure platform. And really the mission for us as a business has been to recognize that actually the distribution model used by traditional online grocery is not fit for purpose. And many of you might ask, why is it losing £300 million a year? And I can tell you that it's actually much more than that now, because the online grocery market has exploded to over £16.5 billion in the last 3 years. And the reason being is that actually, for some reason or another, the retail industry decided to adopt a vertically integrated linear distribution model. They all built their own individual networks: the Tesco network, the Sainsbury's network. Now, for anyone who understands commodity distribution, you understand that shared infrastructure, decentralized networks is a fundamental. That's why we have one gas network. That's why we have one electricity network. And so the reason you do that is because it would be prohibitively expensive to have heat and power in our homes and businesses if we didn't all share the cost of that infrastructure. And so what Buymie is that shared infrastructure for multiple retailers to manage the distribution, digital infrastructure required, and the logistics network to be able to provide same-day delivery. And so why is this happening? Why are we in this space? And to try and take it back a little bit, again, a slightly bigger view of what's happening at an economic level, which Dr. Reynolds really talked quite interestingly about there, is that we over the last 15 years have experienced a global shift in the way economic activity is managed. We have moved from an organizational economy of the 20th century, which was developed, in the Industrial Revolution with the first emergence of what we know now as corporates, and we have shifted to a market-based peer-to-peer economy for the 21st century. So an organizational economy relies on large corporations to manage and mediate economic activity, both labor and transaction flow. But with technology, with the level of connectivity, and with the rise of platform, we now have data-driven platforms sitting above almost every single vertical in every single industry globally. And what I mean by that is that you have a platform that sits above the market, not in the market. It soaks up local economic information at a rate that's never been done before through the use of these supercomputers that are sitting in our pockets. All of this transactional and economic data is generated, processed in a high frequency fashion, mostly by algorithms, which removes friction, allows stakeholders to connect and transact in a way that they've never done before. And you can see this happening across every single industry and market that you might operate on a day-to-day basis. And that's quite important to understand, because that is a fundamental change in the way our economic models work, the way our markets operate. And that's also quite important to bear in mind, because platform economics, something that's not quite often talked about, is fundamentally different to what we understand as traditional linear economics. And so one example of this is there's a terrific book called Modern Monopolies: How to Dominate the 21st Century, by the founder of one of the largest app development platforms in the US called Applico. And one of the most interesting insights from that is that if you look at the S&P 500 today, in 2020, you'll see that the total percentage of platform companies in the S&P 500 represent just 4%, but 13% of the total income generated by the S&P 500 is relevant to those 4%. And when you extrapolate that out, by 2040, we're looking at roughly 14% of the S&P 500 being platform technology companies, but 50% of total income generated coming from that 14%. This is a fascinating trend to really think about what that means for the way in which our markets are going to continue to operate. And this is happening right with, the funny thing about this is that it's not happening at a linear pace. This is happening at an exponential pace. You can see this happening in real time, and this is the perfect example of it. If you want to understand the difference between a platform business and a traditional corporate linear retail environment, you just look at Amazon and compare it to Walmart. The growth that what Amazon has seen over the last 10 years is exponential, and that's not by accident. It's because of the benefits that platform economics has. They sit above their markets, not within it. If you think of grocery, for example, a perfect example of this is the grocery market. Total market size, and this is all channels combined. Bearing in mind that the top 3 fastest growing channels in this sector are in the order of fastest growing: online, discount, and convenience. All 3 of those channels will be exacerbated by COVID. No question. Online, if there's a recession, discount, and we can already see that local convenience stores have seen a significant uplift. So what was already a very fast growing 3 sectors of the market has just been accelerated even more so now. And if you look at the total market, and the way I would frame this is that if you look at the total market size, it's 250 billion-ish of total spend in grocery. The largest player, Ireland, UK, Europe, Tesco. Their market cap, 23 billion pounds, I think, at last count. And now they're going head to head in their fastest growing channel online, with a $1 trillion company that's 4 times the size of their entire marketplace. It's not even a competitive conversation. And what we saw 3 years ago was a catalyst event. And if I was to ever say, if you wanted me to point to where the correction began for grocery online, I would point to the Amazon Whole Foods acquisition, because that was a catalyst event. You overnight had one of the largest platforms become one of the largest grocers in the US market. And this really fundamentally shifted the trajectory of the market, and it triggered a behavior pattern within the retail space, which is still continuing today. Just 6 months later, Alibaba invested $3 billion in Asia's largest supermarket chain. This is not a coincidence. Seeing these some of the largest businesses we've ever seen in a generation, in a lifetime, moving into this vertical is in such unison is not a surprise. But what we did see was retail starting to react, and we saw Target acquire a shared infrastructure platform very similar to Buymie called Shipt for 550 million. And this was, again, retail trying to fight platform with platform, recognizing that the ability to scale, the growth potential that platform provides on top of the likes of a linear business and more traditional retail provides that competitive edge required to really win in this space. And then we were approached by the largest grocer in Europe, Lidl, owned by the Schwarz Group, in April of 2018. And by the end of 2018, we became the first independent e-commerce platform to take the largest retailer and the discount channel online same day for the very first time. And this is, again, quite a fundamental impact, because not only was discount the second fastest growing channel in the sector, now it's online, now it's same day. And these are all compounding and creating even more pressures on the retail market as we know it. And then looking at COVID, what we've seen is that 69% of people have actually gone to a shop and just turned around because the queue has been too long. I think every single one of us on this call has probably been in that experience. 57% have intentionally shopped at local stores, which speaks to Dr. Reynolds' points. 43% have bought a different brand. And again, we'll all have remember that the availability of product on shelf, particularly in the early weeks of the COVID outbreak, we saw significant challenges within the supply chain. 42% have shopped online because they don't want to queue. I think that's a trend that we'll continue to see. And 41% have intentionally bought Irish products, which I think, again, these types of environments start to drive kind of a national consideration of what we can do for our local businesses. Looking post-COVID, what's going to happen now that we understand that the new normal, the new world that we're living in? Well, that 59% will continue to shop online like they've done during the pandemic. And again, if you think about what's happened here, is that you already had a fast-growing channel. We've thrown an accelerant on it, which is COVID, and we've now accelerated probably 3, 4, maybe 5 years worth of consumers into this channel to try it in a condensed period of time. That again is going to really fundamentally shape the trajectory of the market going forward. 48% will save because of uncertainty, and then again, I think this is a key area that I think everyone is mindful of. 47% will buy more bulk items. We have definitely we saw a large, sharp increase in basket size in the early weeks of COVID. We have seen it relax a little bit, but it's still a much larger basket overall as people shop more. And remembering that grocery has more or less been a beneficiary. As the hospitality and services sectors have suffered, grocery has really absorbed all of that spend as people still need to feed themselves for breakfast, lunch, and dinner. And 34% will be one of the first back to their favorite restaurants. Again, a lot of people not feeling very comfortable with the idea of going to a pub or a restaurant just at this moment, and only 30% will really stop worrying about the virus going forward. And then finally, 87% agree that they will buy more from local shops, which again we've touched on earlier on. There will continue to be an investment in local products, which I think is, again, something that you'll see at a global level within all various markets. And 82% continue to pay more by card and cash. So again, this has probably accelerated the cashless environment, and glad that our infrastructure actually provides for that from the get-go. 79% will continue to be very cautious. I think masks are going to become a thing of common nature, and then local holidays will continue to be a big part of that. Happy to answer any questions that you might have, Laurent.
Yeah, thank you, Devon. Yeah, so I'm going to move on relatively quickly because I want to leave some time to Sinead there, and also for question and answer at the end. If you have any questions, I'm talking to the audience, please fire through the question and answer box, and I will ask them at the end. Very quickly, just for you, I mean, seems to me that you're in the perfect spot because, essentially, you're a convenience store because you can deliver in less than 1 hour. So the proximity of your app, if you want, is just as good as the proximity of a local shop. You do that like at a cheaper price because you partner with the likes of Lidl, which is like the discounter, and you do this online. And those are precisely the 3 sectors that you have mentioned that will benefit or have benefited in the last few years of this change in consumer habit accelerated by COVID. So without telling us, because I know you're expanding to the UK, but without telling us too much about your company, how well have you been doing over the last couple of weeks? I mean, we need some positive news. Hopefully you can tell us, your pockets are full of
I think it's as a period, I think it's unforgettable.
Right.
I feel very fortunate that, we're in the sector that we're in, and because as an early stage startup, an event like this, so unexpected and given the delicate nature of startups, this type of event really has probably wiped a huge amount of innovative businesses just completely off the map. And we feel very grateful that we're in the position that we're in, but also not without challenge. The sharp spike, we saw a 300% increase in volume through Q1. We were trading 10 months ahead of our own business plan for 2020. And what that meant was that we had to really completely revisit what our expectations were for the year. We had to completely restructure our funding strategy and our commercial strategy for the year. And we were very, I think in a very positive opportunity because we built up a very strong network and recognition within the market. All of the work that we did last year was all about scale. How do we get our platform to scale with demand, because we were working with large enterprise retailers. And when COVID happened, all of that work really took on what I would call probably a higher meaning, because we overnight became an essential service. We were very lucky that, off the back of that and with the performance that we'd already had in the year, we grew our weekly volume 2,000% in 2019. And we were able to close 8 million in new capital in Q1 of this year. Across 2 rounds, one led by ACT Ventures, which is a very well-known venture capital firm in Ireland, and then our larger round was actually led by the Wheatsheaf Group, which is the sustainability, agri, and food investment fund of the Duke of Westminster's family estate, the Grosvenor estate. And so with that, we found ourselves in a very good position to have the right backers, the right supporters, that we'd be able to bring the business forward and really again try to rise to the occasion.
Okay. Okay. Well, it sounds to me that you are describing something that was somehow of a success, but I can imagine that from the exponential, like more than exponential growth that you've experienced over the last months, you had encountered some type of logistical issue in terms of like managing this growth. And that brings me to our last speaker, Sinead, because Sinead is an associate professor here in Trinity Business School, and she's a specialist in supply chain management, and she actually specialized as well in this notion of crisis in terms of for supply chain. So as Devon has illustrated, there's many types of crises. Crises can be due to an overwhelmingly big success, or on the contrary, it could be because your supply chain is broken. So I'd like to ask you your views, Sinead, about like how do you think this crisis has in fact affected supply chain for retailer? How bad or how good it has been in a very broad sense?
Yeah, thanks, Laurent, and thanks, Devon and Jonathan, for two very interesting perspectives there. Yeah, so I think I just want to spend the next 10 minutes or so just speaking exactly to that, the impact of this crisis on supply chains. So very much looking at the supply side of things. And I think, to pick up on one of Jonathan's analogies that, our recovery is going to be very much a marathon and not a sprint. I absolutely agree, but I think it needs to be a new race from a supply chain point of view. We can't go back to the mistakes and the errors of the past. So I think at this juncture, let me just share screen. So it should be sharing now. Yeah, so I think the way I like to think about COVID and position it from a supply chain point of view is that it is surely a black swan event, something that has happened that wasn't predictable, but has had a huge impact. And we've seen that supply chain and the narrative around supply chains are now day-to-day parlance for most of us. We're no stranger to these types of events and the impact they've had on supply chains. The financial crisis saw massively reduced demand. The Japanese tsunamis, the Thai floods have massively impacted our supply chains, particularly the tech supply chains. COVID-19, however, has been so catastrophic because it's affected both demand and supply, and has had a global impact. From a retail point of view, we know that retail supply chains just weren't engineered to cope with this level of disruption. From stores to the logistics systems to the distribution networks, supplier relationships, they just weren't set up to allow the agility of response that was needed. And we saw retailers up and down the country reactively respond to gear up every aspect of their supply chain and delivery systems, from procurement right through to customer service, in order to respond. We're still very much in the midst of the pandemic, and we don't yet know exactly the exact effect on supply chains. There's just not enough data there at the minute. But one thing that we can be sure of is that we need to change moving forward. We need to run that different race. We need to lay a different path. We need to think about crafting much more resilient systems, much more resilient operations and supply chains that support our retail systems, because they just didn't have the resilience that they needed. We might question as well how, why were we not ready? We know that these types of disruptions, call them high impact, low probability, if you like, these types of disruptive events have been on the rise. They are becoming more frequent and they are becoming more impactful. So we should have been forewarned. There has been lots of discussion in the supply chain literature, and it's part of my area, looking at risk response and development of resilience. But in practice, we're just not good at delivering on what we know as best practice, and we have designed supply chains that are vulnerable for very many reasons. We look at much more complex, distended, geographically dispersed supply chains, much more modularity, increasing number of handoffs between different part suppliers. we're running much leaner systems. We're running on zero inventory often. We're focusing on cost. The focus on cost, ignoring the other, the cost below the surface, if you like. We're focusing on purchase price as the tip of the iceberg, and forgetting how else we can leverage procurement effectively to drive real value. We're focusing on sole sourcing. Having our key strategic parts or products, our key services delivered just by a sole supplier is just fraught with difficulty. And we see Apple, for example, fell foul of this. The coronavirus outbreak exposed so much of their dependency on China. And from a risk point of view, we talk about transparency, about visibility into our supply chains, but in practice, the majority of companies have no idea what their risk exposure is, and specifically for Asia, we don't know how badly we are exposed. These are all issues, these are problems, and we've known this. We know that we should be changing and adapting, but coronavirus strikes, and these factors and others have meant that we've suffered so catastrophically. The weak links become ever more exposed whenever you have such areas of vulnerability. We have absolutely buried our head in the sand on this. We should know better. Supply chain best practice is anything but the aforementioned. When we look at the dependence that we place across sectors, across industries on quarantine areas, you can see just the impact there of China, and the reality that China has affected every single supply chain that we touch. So coronavirus, in short, has completely immobilized so much of our delivery from a retail point of view. What does the future look like? Well, I think we've gathered already that online shopping is going to be the new norm. Until people can be confident being back out and enjoying that shopping experience, online is going to be prevalent. Transportation and warehousing are going to be front and center. So traditionally, almost the lesser considered of the supply chain functions, how we manage our transportation, how we manage our capacity for warehousing is going to be ever more important as we focus on direct to consumer models. Dark stores are going to become much more prevalent, where customers can confidently, safely and securely pick up their click and collect orders. We're seeing stores transformed. So not so people facing, but that click and collect option. Customer demands or expectations are escalating. The click effect, where you want product variety and instantaneous delivery almost. That's growing. Meanwhile, COVID has seen supply chains just shrink and product availability become a real concern. So we've got customer demands escalating, but the ability of the supply chains to provide really struggling. So we need to look at how we can deliver the product availability, the product choice at a convenient time and place for the customers. COVID really saw us reprioritize and think about discretionary versus non-discretionary categories. Yes, that's not going to be a long-term issue as we start to normalize again. But definitely COVID saw us reprioritize, and those discretionary categories and organizations and firms involved became transformed. We saw real innovation take place as you've got the Hermes and the high-end designers take to making face masks and the like. So we saw real innovation, and I think that will continue. It's got to continue as we look to create a much more agile, customer-focused supply chain system moving forward. We've touched on it again. I think Jonathan and Devon both mentioned this idea of the localization, local opportunity. Never risk a good, never waste a good crisis. We saw many local retailers and local firms really benefit from the customer preference to buy local and to support local. There's also the opportunity for SMEs and Devon, as well, that the ability or the agility that comes with being much smaller and flexible and agile in your processes and your people is undoubtedly a good thing. So what's success going to look like for retail moving forward? I think we really have to revisit the old pillars of agility and flexibility in supply chains. We talk about them, but what does it mean for retail moving forward? Yes, short term, it's going to be an emphasis on cash management for liquidity and solvency, but soon after, we really need to get down to the basics here on what resilience means and how we can craft resilience through thinking about our agility and our flexibility. The localization, how can we reorganize our production? How can we reorganize our manufacturing? How can we bring our procurement back to shore to have that quick response? How can we work much more collaboratively? We talk about collaboration and partnerships a lot in supply chain, but in practice, we're not necessarily so good at doing it in crisis events, at times of crisis. But there's a real opportunity here for actively seeking partnerships, not only within your own value chain, but beyond. You share cost, you share risk. You could start to think about models where, department stores are offering in-store pickup services to e-commerce companies, and likewise e-commerce offering online order fulfillment for department stores. We could see a emerging of the industrial sector and retail with the focus much more on distribution and warehousing, and that fulfillment capabilities and innovation around fulfillment. Surely that calls for some greater collaboration between the industrial sector and retail. Procurement, moving away from these sole sourcing models and looking towards more localized procurement and building in capacity, building in redundancy. We're very anti redundancy often from a supply chain point of view because it costs, and the storing of inventory, for example. But we need to think a little bit more strategically and critically about what inventory we should be storing as retailers, and what's going to be what's going to be the value add for customers in that regard. And then starting to think about flexibility. Technology is undoubtedly going to pave the way here, and if anything, COVID has accelerated the focus on automation, on end-to-end delivery to customers. We see it happen in grocery, and I think it's just a matter of time before we see that complete automated end-to-end customer delivery process just across so many other parts of retail. The potential of RFID here in terms of adding visibility and transparency, I think is critical. Flexibility. COVID was a great lesson for building flexibility into our retail and into our processes, looking at flexible staffing, flexible site facility. I think that's going to be here to stay. We need to think about organizing our processes in a much less rigid manner so that we can change and adapt to what is a very dynamic and uncertain marketplace going forward. Thinking more critically about product variety, the sheer number of SKUs that many retailers are offering, how sustainable is that? Does that lend itself to the online delivery system, and from an order management and processing point of view, is it sensible? I think fulfillment is going to be central here as we start to look at the localization, coupled with the fact that customers want much more speedy, instantaneous delivery options. How we consider fulfillment and how we innovate around that is certainly should be a focus of attention. Flexible logistics, looking to our 3PL partners, looking to flexible warehousing and the capacity associated, certainly has to be a focus for supply chain systems going forward. And I think it's to kind of circle back round on they're putting the head in the sand around all this and not retracing the old mistakes. I think we have to decide to either use COVID to draw that line in the sand and to change what we do, how we do it, and how we deliver to the customers, or we will find ourselves in this position again.
Thanks a lot, Sinead. I mean, thanks a lot for this very comprehensive presentation on the supply chain implication of this crisis. I'm going to bridge the gap between, or bridge from what you've said to what the previous speakers have said, and maybe ask a question that you may answer, or that like the other speakers might jump on. Basically, from what you said, Sinead, and from the consumer behavior points that were made by both Jonathan and Devon earlier, seems like there's going to be two categories of ultra winner, if you want. On one hand, you have the local, okay, so local shop with local maybe supply chain, buying Irish, you know, buying like from your own national country, and those type of consumer behavior, and so with a mini reduced supply chain. And on the other hand, you seem to have like a very online, globalized, hyper-globalized supply chains in the likes of Amazon, where you might buy from Amazon and with a supplier that is, and a seller, sorry, not even a supplier, a seller that is actually located in Germany, and who himself may, you know, get his parts and for his product from elsewhere, and you get it delivered to your house. So in other words, from a supply chain point of view, you have a hyper-globalized, hyper-extended supply chain that goes from the very producer that might be in China or elsewhere to the retailer that who might be in Germany to your doorsteps where the delivery is being made. So you've got this contradictory movement, and what's left in the middle, and that comes back to one of the questions that were asked by the attendee, is the national retailer, a non-online national retailer. That may be finding himself like pulling away from those, you know, national retailer maybe located in the city center, okay, to some of the point that you guys have made. I'll come back to, so I'd like to welcome your thought on this. And the follow-up question is, what's going to happen to the likes of a typical retailer like this, which would be Pennies, for example? What do you think of how they're going to survive? They don't have an online presence. We know they bounce back quite heavily on the first few days after the post-confinement phase, but
yeah,
thought on all of this.
I think to touch on the first part of that, I think we'll see a massive surge in online presence across those retailers, so that there will be a capability development probably very quickly and reactively to this COVID, and awareness that customer expectations are changing, and that they do expect to have some type of online channel through which they can procure services or product. You know, so many even services that we didn't assume to be to lend themselves to this online delivery have adjusted, and I think you would risk a certain demise if you weren't adapting and responding to this online need. So I think across the board that we will see online provision. You know, from counselling services to my sister's a dietitian, and you know, they've got very terribly creative with dealing with patients in a very remote way. So I think this will be the new normal. In terms of Pennies, you know, I guess on one hand I'm surprised that they haven't tried to, I guess, the sheer size and the number of SKUs that they do run, but I would imagine going forward that there will be an online presence there. You know, I've used Zara case study quite a lot in my class, and you know, traditionally Zara was not considered to be a retailer that could have an online presence due to their business model, but they have adapted, and it's excellent. This was pre-COVID, so I think to discount the online model would be a shame for Pennies. I think there's opportunity to even run a more focused product lines, but I guess time will tell.
Is there the opportunity, maybe, and Devon maybe or Jonathan might pick on this? Do you think, like, for a shop like Pennies, there's an opportunity to partner like someone like Buymie, but for non-food retail, where, you know, an entity, a platform takes on this customer interface delivery aspect and leave the shops being where they are with the local?
Well, I mean, that did happen. I mean, Primark did actually, Pennies did experiment with ASOS about 10 years ago now, and they gave up the experiment, you know. So I think there was a trial at one point. I think you can now still buy secondhand clothing from Primark online at ASOS, but yeah, I think they gave it up because they didn't see the demand at the time.
Okay.
I think it could, but I think things have changed. Yeah.
probably more mature now. Yeah.
Add to that, I think, you know, online and delivery is often confused and often conflated as one thing. I think what we've seen, particularly in the last 5 years, when it comes to food retail, and you can say that this is for the verticals as well, is the resegmentation. So you have your meal kit deliveries, which are your likes of Gusto's, HelloFresh, Blue Aprons. You know, they're typically turnaround times about 5 days. It's very planned, it's very scheduled. Then you have your traditional online grocery, which is next day, 2 or 3 day out. And then you have same day. And they are ultimately different channels, different customer missions, and have vastly different economics. So, you know, one of the things when it comes to, and we've been often asked like, oh, would you not take Primark online, or would you not do, you know, McDonald's before Uber had started to do McDonald's? And realistically, you have to be quite careful, because what has been, when it comes to same day delivery, one of the biggest mistakes that's been made is that there are a lot of platforms that have tried to be everything to everyone, building very generic technology stacks, very generic infrastructure, and they ultimately end up being nothing to no one. And when it comes to grocery has a lot of complexity and nuance, and you know, we're entirely grocery focused. We're only building technology and data infrastructures for grocery as a category because it has a lot of complexities, like chill chain, for example. And so when you start to mix different categories in, you can end up really kind of doing yourself a misjustice, because you're just not set up to be excellent at one thing. And I think these are kind of the interesting areas. And then you're saying that is the demand. Like, do people need a pair of tights from Penny's delivered in an hour? I'm not quite sure if the demand is high enough for it. And level of demand within day, similar to the electricity network, is quite a fundamental component of how you get different networks and different channels to operate efficiently. Grocery is a bell curve, like electricity. It takes off in the morning, peaks in the afternoon and even early evening, and then cools down. Whereas hot food delivery, for example, is a Batman problem, where it goes flat lunch, flat dinner. And that's a very inefficient demand curve for decentralized distribution networks. So it really depends on the channel, it depends on the complexities, and ultimately then the technology infrastructure you want to design to do that. But I think shared infrastructures, no matter what vertical or sector you're in, shared infrastructure is the only way to make it commercially viable.
Okay, thanks a lot. There was actually a kind of a follow-up questions in a way. Jonathan, you mentioned secondhand retail. There was one question specifically on
from Tara. Yeah, I see that.
Yeah, how do you think it's going to be affected? You know, such as vintage and flea markets, and I mean, there's been a lot of talk about like moving away from this globalized economy.
Yeah,
and in a way, like, you know, secondhand and being more aware of sustainability of our consumption is something that has been talked about in this crisis, and also, but we know that this is currently happening in small, local, crowded shops. So, what's your take on?
Yeah, I mean, I think you have two kind of countervailing forces, don't you? As you say, you have a refreshed move towards sustainability, so growth in secondhand, thrift shops, and so on. But at the same time, many of these are actually in pretty undesirable sort of buildings in terms of social distancing and so on. So they're actually not very viable. And we've got, for example, a Red Cross shop in Woodstock, which is about a mile from me, and they're only allowing 2 people in there at a time because it's not a big enough store to get people in, and they're overwhelmed with product that they have to actually quarantine before they can put it on the shelves. So that there's a short-term challenge there, but there's a medium to long-term opportunity, I think. The other aspect, I suppose, is the size of these things, as you say. Craft fairs, flea markets often tend to be open air as well, so that's a much more desirable kind of place to be able to do that kind of thing in. Open food markets as well have done pretty well over the lockdown period in the UK, because they're seen by shoppers as being inherently kind of safer to be there than in some kind of enclosed space. But I do think that the lockdown has made us as societies and cultures appreciate more some of the sustainability and environmental impact of our previous activities, and to the extent that will reflect in our buying behaviours, we'll see that as an opportunity for charity and secondhand.
So something positive, yeah.
Okay,
listen, we've done very well, and the seminar was well attended with more than 50 people on the other side that we're not seeing, but we are saying hello to you. So I'm conscious of the time, and as I see that the mark start to drop as we go past 12 o'clock. I would like to maybe conclude, if maybe ask like every single one of you, member of the panel, if you have like one word to say that you'd like to, to summarize your thought about this COVID-19 crisis and the implication on retail, but literally in a couple of minutes. What is the number one insight that you were obviously still unfolding, that you're taking from this crisis, from looking at like your area of expertise? What has fundamentally changed, and what do you think is the number one lesson to remember from this unfolding crisis? Who wants to start with this not so easy question to answer?
Shall I kick off? I mean,
okay.
The thing that struck me is the how creative and innovative we've seen businesses, the best businesses, respond to this crisis. Not from the top necessarily either. Often from the teams on the shop floor or the local retailer. Bright ideas have more opportunities to prosper now than they ever had. And although times are tough financially, I think in terms of just cash flow and keeping the business afloat, the resources of the retailer and those people who are becoming retailers to invent the future never ceases to uplift me, I suppose.
Very good. Who wants to take on and follow up? Thank you. I think that's a very good point. Like the agility and the innovation that people have demonstrated. I agree. I think we are in general a species that can adapt very quickly and are actually more resilient than we give ourselves credit for in general and in the context of retail in particular. Sinead, you want to go ahead?
Yeah, I think, and as much as I've probably seemed quite critical of the response, I think, many retailers and many sectors will look back with a degree of pride at how they've managed to muster a response to what really has largely been an unprecedented disaster. So I think that yes, in agreeing with Jonathan, there's a lot to be positive about here. But I think let's not forget, and let's really take fragility serious and look at our vulnerabilities and maybe try to. Greedy is not the right word, but let's try to focus on the weak points and not try to spread ourselves too thin going forward.
So limited, not focusing on limiting the cost and having the most effective supply chain, but maybe a supply chain that is slightly more resilient and
considered. Yeah.
Thank you, Sinead. And Devon, you want to say a small conclusion?
Sure. I think no matter what industry you're in or what sector you're in, I think everyone needs to really give some serious thought to incentivization. Having spent some time now in the FMCG industry, for example, what I have seen is that the industry as a whole is typically publicly traded businesses. And the executive remuneration strategy in the sector is very much focused on the next 3 months, the next quarter. What's the number? Am I going to hit the number? And all my decisions are based on the next 3 months. I really think that the trajectory at which our market, our economies, our sectors are all now on, given this, kind of fundamental shift in the landscape beneath our feet, we really need to start looking more long term. And I think to Sinead's point, I think Sinead has made some really, really insightful comments around the challenges that supply chain have as a whole. And I can't help but think it's due to the short term incentivization that many of our sectors have built to fundamentally deal with longer term challenges and not thinking exponentially. They're thinking very linearly, and realistically the world in which we're around, whether it's been transformed by a virus or technology, the world that we live in is not linear, and so why should our perspectives?
Okay, so long-term consequences, agility, innovation, and sustainability are some of the key message and key insight that we can take from this crisis. In a way, what you are all saying, even though this crisis is unprecedented and was not necessarily taken as a potential risk, it is increasing trends that we've already seen in terms of consumer habits and technology and the makeup of various of the retail industry. So without further ado, I will thank you all, our panel discussant, for coming here today and sharing your insight. I am extremely grateful that you took the time to come and share your expertise. This was the very last webinar of the Trinity Research Centers in Social Science. So I think I'm very proud that I have hosted it with such a great guest, and I hope you have enjoyed it. We will probably see each other, hopefully physically, in the future. And yeah, I want to thank everybody for attending, and again, thanks to the panelists for sharing their thoughts. Thank you very much, and hopefully, I would like to thank Maeve as well for organizing this particular and being in the background, making sure everything was okay. Okay, so thank you very much, everyone, and hope to see you soon. Thank you.
Thank you, Laurent.
Thank you guys. Bye-bye.
Thank you. That was very.